Hello, I'm Dominic Hobson, co-founder of the Future of Finance. My guest today is Thorsten Peisl, founder and chief executive of Kalyp Technologies, which builds blockchain infrastructure for digital securities. Importantly for our discussion today, Thorsten is also co-founder of the Digital Securities Depository Corporation, or DSDC, which is a blockchain-based financial market infrastructure in the United States powered by Kalyp Technology. Thorsten was previously with State Street, which he joined in 2003, when the American bank acquired the global securities services business of Deutsche Bank. Thorsten, thank you for joining us.
Dominic, thanks for having me. It's a pleasure.
Now, it's been quite a long journey. Kalyp Technologies was founded in 2016, and it was set up to apply blockchain technology, as I said, to the securities markets. What have you learned over that time about the difficulties, I imagine, but also the opportunities of innovating in the traditional securities markets?
Over my time at Kalyp, or in general, I guess generally for my entire life I've been innovating in some way or form or shape in the security services industry. I think it depends on where you sit, right? If you sit within a large organization, if you collaborate across organizations, or if you build a startup like I do here at Kalyp. If you're building within at Deutsche Bank, states that have built a collateral management system, here it's really you need the political protection in order to push through with the innovation and get it out in the market. If you collaborate, if you establish consortia, what I did at State Street as well, and through venture programs where we were working with outside firms and try to integrate them into the value chain. And really here it's about finding the right form of alignment in order to bring the innovation to the market. And in order to be successful with what I do at Kalyp, it really boils down to finances, making sure you have the right financing structure so you can afford the innovation to bring it to the market. I guess all of what I've just said is really not very specific to the security services industry or traditional security markets. In the security markets spectrum, I would add the industry can be divided into the trading space, which has always been very highly innovative and fast-paced, and then the post-trade industry, where I'm focused, where I've grown up in. And in the post-trade industry, I guess the most valuable piece is its persistence. I think, Kalyp 2016 has been 10 years in the blockchain space and digital asset, digital security space, and to change an environment that is highly regulated, that has lots of players, long value chains, very complex. There's no book that you can download from Amazon to understand really how it works. So in order to make change there, you need to come from the inside and be persistent. I think that's my take on it.
Okay, now talking of post-trade and talking of persistence, some years ago you identified American Depositary Receipts, ADRs, as an attractive use case for the blockchain technology you were developing. Now, the list of problems in the ADR market that you're now promising to solve, I'm referring here to high transaction fees, slow payment of entitlements, uncompetitive FX rates, partial shareholder voting rights, cancellation issues, and all of this maintained by quite a tight oligopoly of custodian banks, suggests that the attraction of ADRs was the manifest inefficiency of the status quo. Now, aren't those inefficiencies you've identified exactly the revenue streams of the incumbent banks? And doesn't that make it very hard to change the ADR market?
Yeah, you're absolutely right, Dominic. I think the current four incumbent banks, generally for Deutsche Bank, Citibank, JP Morgan Chase, and Bony Mellon, they dominate this market. They've been dominating this market since 100 years, roundabout-ish, right? And 1927, 26, when JP Morgan Chase invented that product. So it's a very old asset class that is globally understood. And this is also getting to the reasons why we have chosen it and why we found it so attractive in order to improve that asset class with blockchain technology, so to speak. Right. Number one, in my view, it's the granddad of a token, right? Because you immobilize an asset in a territory, in a jurisdiction, then you create an entitlement, you create a receipt in a new jurisdiction, such as the United States. So from that point of view, when we started looking on how to bring the technology in the market, the entire industry was consumed with a debate about what is a token, and we didn't want to participate in that debate. We wanted to say it's a DR, it's an ADR, and we were leaning on existing time-tested, proven legal framework. A second reason also, this is a cross-border market, and the ADR market involves a very long and complex value chain that currently is being wired together by, don't want to pick on any of the DR banks, but in-house, and there's about half a dozen or dozen services that need to be wired up together. And then you need to have a footprint in every country, such in the UK and in the US, if you want to do ADRs on UK companies, as an example. So very complex, and therefore it lends itself quite well for a DLT where multiple parties need to come together. And the last reason why we've chosen it is it's a sizable market, right? $1 to $2 trillion in assets. It's large enough to make a very nice business case. But at the same point in time, right, compared to the rest of the United States market, right, it's in the lower percentage points probably. So it's super attractive as an entry point. But you're right. Today's inefficiencies generate the revenue streams for the incumbent banks, and that's exactly what made it probably for them at the outset difficult for us to engage with us. We approached them in the very early days. Actually, I proposed to them that we build a new platform for their business, but the business model, the inertia, and where they make money rendered that difficult. So our go-to-market was practically we were approaching everybody else who was not in the ADR market. And if you remember the four names that I just mentioned, the only large asset servicing player that is not in this field is State Street. So as my former employee, it was a fairly easy call to say, would you be interested, A, in order to get into digital securities, and B, to play in an adjacent asset class that you haven't been involved in. So everybody who is not in this $1 to $2 trillion large market is extremely open to tap their toes into this field. So yes, for the incumbent banks, it's been difficult, but we have various conversations and continue to have conversations to plug in different services of theirs. But we get tremendous support and tremendous interest from everybody else.
Another group you had to engage with in the United States is, of course, the regulators. You've clearly made progress on that. You've embedded a FINRA registered broker in the shape of Rialto Markets into your blockchain-based platform, which is clearly designed to allay regulatory concerns about compliance. Is it safe to say that you now have regulatory certainty for what you're trying to do? And if you do, how much does that help in generating engagement by the ADR market participants?
Your first question is yes, we do have regulatory certainty. And I think this is a milestone. It's huge for us, and it's huge for the industry overall. To get to this point, we had to complete more than 4 years of SEC consultation, 20 legal opinions, statements, analysis had to be submitted and had to be debated with them. At the end, we received their guidance and their support on how to operate that distributed market infrastructure on US grounds, on US territory. Second, part of that, they had a requirement. They wanted that the network and the transactions are being supervised by the regulator, and specifically, they gave us a couple of options. And the option that we've chosen is the broker supervision. So we went through a buy-build partner decision internally, and at the end we partnered with a broker. You mentioned already one of them, Rialto Markets, to supervise their transaction activity. In order to get to that point, we had to go through 1 to 2 year FINRA engagement and to support our broker in their journey to engage in our business. And at the end, FINRA has awarded them with the regulatory authority to supervise those transactions. So today we have a distributed market infrastructure that is under US regulatory supervision, is on US territory. Both of these lend quite well to the current administrative aspirations, right? The US political regime and what they do and what they plan. But at the same point in time, we have the international linkages. So we bring better security into the US marketplace. And today we have filed the first security, not today, couple days ago. We have filed the first security with the SEC, the Securities Exchange Commission. It is publicly available in EDGAR. So we bring London Stock Exchange stock, London Stock Exchange Group specifically into the United States. And this is a tremendous achievement.
Now, I'm going to try and describe the model which I think you've built, and please bear with me if I get this wrong. But the way I understand it is that the underlying European stock, like LSEG, is still being issued into a national CSD, such as Euroclear Crest in London. It's immobilized at a global custodian in Europe, State Street, who you mentioned. And it's the DTCC, the American CSD, which is maintaining the register of holders of the ADRs in the US. But these ADRs are being issued in the form of tokens called Digital Depositary Receipts, or DDRs, with embedded smart contracts onto the blockchain network, which you have built or was using your technology. And that's operated by the organization I mentioned right at the outset, the Digital Securities Depository Corporation, DSDC, in the United States. So my question is, briefly, have I understood your model correctly?
Broadly, yes, but let me refine a few points. So yes, the securities, the underlying securities, you gave the example of the UK, and I mentioned London Stock Exchange. Securities can never leave a country, right? They're enshrined in the local law. They operate under local law, and therefore, if an international investor, would like to hold a share in London Stock Exchange, this is happening under the local law. So therefore, they open up an account in the UK, and therefore can have the ownership in that asset. Usually, they have this through global relationships or through an ADR program. So we are immobilizing a share in London Stock Exchange in the United Kingdom on Crest via State Street, as you indicated. State Street is the custodian on the network. And then as the security has been deposited in this Crest account, in the United States, a DR is being created. The DR is initially being created on the network, but then we integrate via transfer agency relationships and transfer agency services that are connected to our network, the security into DTC. So on day one, actually, the securities are digitally serviced, digitally issued, digitally cancelled, servicing, anything from dividend payments and everything else that falls within the entire life cycle of an asset is managed through the DSDC network, the distributed market infrastructure, and its members who run it. But from an investor standpoint, on day one, we integrate into DTC. That means the investors in the United States, or the marketplace of the United States, doesn't need to change their relationship, doesn't need to change their accounts, and from their standpoint, they receive a better security or better securities. Right? I don't want to be stuck on a single issuance that we've been referring to before. It's about an entire asset class, and we have a parallel strategy, and we've already contracted parties that will allow us to bring the same security in a fully fungible way into digital rails outside of DTC. So first distribution is via DTC, so everybody can access this barrier-free, no change of relationship, no new accounts. And then as the market is adopting more and more digital rails and gets more comfortable, perhaps also with wallets, then the same instruments will be available in a fully fungible way.
Okay, so I get your model is less disruptive to the status quo and therefore more likely to be successful. But could you expand a bit upon the benefits of using blockchain technology? We know, as you pointed out, the DSDC is using the Kalyp blockchain technology. Now, how does an infrastructure based on blockchain improve on the traditional market processes? What would be on your list of benefits of doing it that way?
List of benefits, I guess it's the nature of the industry, right? I described earlier, I believe that the post-trade industry, I see the post-trade industry as a large data management business with lots of legitimate players that perform different functions and mitigate different types of risks. If you operate in such a market, then how can you improve such an industry? And that led us to a product with three features. At its core, it's a database, a multi-party database that hosts security reference data, right? And in a reconciliation-free environment among the players, you need to reconcile internally amongst your own systems, but externally reconciliations being removed. Because securities that sit in this database and security reference data, ownership data at nominee level, for instance, they come in different forms of shapes. An ADR is very different to a debt instrument, is very different to a fund. For that reason, we have put a workflow engine on top of that database, and that workflow engine captures intercompany workflows. So how the players communicate and interact with each other. They come with end-to-end transparency, workflow transparency that doesn't exist today, removes operational risks, operational issues, and comes with an immutable audit trail for certainty. So you see kind of what needs to happen after me, what has happened before my turn, things like that. And then finally, the third feature after the multi-party database and intercompany workflows, the third piece is a marketplace of services. This allows us to identify the most suitable service provider. Once we have identified the most suitable service provider for a task in a workflow, to then be involved in multi-party data management, that allows us to create a dynamic competitive value chain of non-affiliated players. So a better model. And again, when you contrast it with what is happening today in the ADR market, it's a rigid internal value chain. And we open it up, we bring competition in this, and we make it more dynamic. You can plug in AI agents, certain compliance tasks are automated through smart contracts in a trusted manner. So there's so many ways on how you can bring efficiency into this industry. And this is how we've been approaching it. And so the question on how does blockchain improve traditional market processes isn't that straightforward, but hopefully I'll give a good sense.
And from an issuer point of view, is there anything to add in terms of the advantage of issuing a DDR as opposed to a conventional ADR? Is it the same list of benefits you've just itemized?
Well, from an issuer standpoint, again,
or maybe an investor as well. Yeah. I mean, what are the advantages of DDR over an ADR?
So the advantages over the DDRs that we digitally orchestrate versus the conventional ADRs. If we contrast the DDRs, as you refer to them, have a unique ticker and a unique user that allows us to benchmark the security, make it available in a very clear and clean way, as any other instrument that's trading in the United States. Then when you hold the DR, you enjoy faster dividend payments. So today there is typically cash distributions in an international basis from an ADR standpoint between 2 weeks, sometimes even 6 weeks. We bring it down to 2 to 3 days. You have lower holding fees. We've done some estimation for the first securities in the UK, bringing them into the US. There's up to 80%. So we're not talking about basis points, but 80% in lower fees. Granted, this is not going to be the standard globally and for the entire UK market, but these are the first set of securities that we bring. We offer the entire system at no transaction fees for market makers. So there's no issuance, no cancellation fee, no rebates that are debated in any ways, and there's a wider set of shareholder rights. So today, on certain instruments, a lot of the unsponsored ADRs, most of them, I believe, even you are unable to participate in a shareholder vote, and we extend voting options to the US investors, and everything else, right? The redeemability that you can, the full access to the underlying entitlements, that we guarantee market integrity. Those are the kind of general properties, and the same properties will be ported over into the digital rails and then being added by more benefits such as faster settlement and other things. But again, this is more future music.
You've mentioned shareholder rights. So am I right to think the DSDC is going to be servicing the DDRs or ADRs as well, by which I mean collecting the dividends, voting the shareholder rights, and maybe even cancelling them as well, where that's what the holder wants to do.
Yeah, yes, but I think I'd like to clarify the role of DSDC. And right, Kalyp is the technology provider that builds technology for distributed networks, and DSDC itself is the governance body of a US-based network that initially starts with ADRs. And the services themselves will be provided by regulated financial institutions, not DSDC, not Kalyp. So DSDC is the governance body, Kalyp is the tech provider, and regulated financial institutions provide those services, including those that you have just mentioned.
Now, you've alluded to this, but the DSDC is set up as an open network through which service providers to ADRs, such as the custodians, the transfer agents, the brokers, the market makers, all organizations you've already referred to, but they can connect their services to offer to support the life cycle of the depository receipt in its digital format. Now, what services does a depository receipt need in a full life cycle of service? I mean, we're talking about custody, registration, FX. So what services does the DR need, and how will the competition to provide those services work in practice through your open network?
So yeah, there's a whole set of services that is required, right? You need regulatory filings, registrations, you need transfer agency, you need payments, you need FX, you need custody, you need a bunch of others. Again, any regulated financial institution that is offering such a service is obviously welcome to join and enter the ADR market through the DSDC network. Fully on US territory, as you said, and the governance body is also sitting in the United States, so plug and play. The competition that you mentioned, none of the services is offered on an exclusive basis to an institution. So it means multiple transfer agents, multiple registration services, et cetera, can connect to the service. And the network has the marketplace that we've mentioned, and the marketplace will identify in a transparent fashion which provider will be awarded with business at what point in time. There's a couple of models on how that selection of the provider will work. Again, it's a user-driven network, so the community sets those parameters on how business is being awarded. But in general, we have three models. Number one is we select the provider. Again, especially today, we do not have all services. We don't have providers for all services in a redundant fashion. So we're covered on all fronts, but some services such as UK custody is exclusively stated at the moment, right? So we have an option to select somebody on a predefined basis. That's the selection model. The second one is an algorithmic model where we have an algorithm that transparently selects the providers out of the providers online and connected to the network. And finally, we're experimenting with an auction-based model where we have a more competitive selection of providers for a given task in a workflow, and then for joint data management at the end.
Well, those three methods are actually rather revolutionary. I'll be interested to see how those unfold in practice. Now, my understanding is that the DSDC is currently owned by Kalyp. Is that correct?
That's correct.
Okay, but your intention, anybody can read this on the DSDC website, is to mutualize the organization so it becomes a decentralized digital central securities depository, which will actually be owned by its users. And I assume those users include all those service providers you've talked about already, which are offering their services through DSDC. My question is this: does that mean the DSDC is going to start encroaching on territory which national CSDs such as the DTCC and such as Euroclear Crest regard as their own?
Well, we have built and we've designed DSDC with those institutions in mind, or as a blueprint. So we've looked at how is DSDC, how is DTC structured, how does Euroclear work, how does SWIFT work, how are they being organized, and we have taken those models as a blueprint and then enhanced it with distributed ledger technology. So from that point of view, there are a lot of parallels and similarities from a regulatory or from a legal standpoint. DSDC today is actually a registered transfer agent. So we kind of we position us as a register. We ourselves, so DSDC itself, does not maintain the register, is not responsible for it. For that, we again have engaged a transfer agent in the United States. But that concept of a register could evolve into something else and could evolve into something more in the future. Specifically when the market is more and more embracing digital assets, right? I mean, we have lots of networks out there that are, from my point of view, not fit for purpose in the wholesale capital market from a privacy standpoint, from a performance standpoint, and we all know those criticisms that those often public networks get. Also, public networks, right? We're in an environment where we have still wars, especially here in Europe and other territories of our country. So borders are moving or are being moved, and that we want to surrender full control over our capital markets infrastructure. To me, I'm still skeptical about that, whether the industry is willing to do so. So therefore, right, we've built the DSDC network so it can be embedded in a jurisdiction, operated in a distributed fashion, fully compatible with the legal framework. Yeah, there are parallels with the parties that you have mentioned. Today we are collaborative, we work, and it's very positive. Again, we're integrating securities into DTC, and we leverage capabilities from Euroclear Crest because that's a necessity for today. But what the long-term future will bring, I guess everybody will evolve and everybody will change.
You mentioned you've done your first deal now with the London Stock Exchange Group. That means, I assume, that the DSDC now have the custodian, which I assume is State Street, in place to hold the underlying stock. I also assume you have a broker, which again I assume is Rialto Markets, in place. So you've got the custodian, you've got the broker, you're ready to do business with other issuers now. So the service is in effect live and ready to go. Is that right?
Yeah, we have a complete network. Yeah, and the parties that you've mentioned, yes, they perform different types of roles. Like State Street is FX and custody. Rialto is a compliance servicer or acts as a depository. But there's other players that fulfill all the other functions. So yes, we have an absolute complete network. That network has submitted the first security to the SEC, as we mentioned. It's publicly available. You can take a look at it. We await the effectiveness of that security, and once it's effective, then we will conduct the first cross-border transaction. So for this purpose, we are now, and we have been working for a number of years with the market-making community, but here we still have room, and we would love to work with more market makers because ultimately the market-making community is the gateway to demand. They identify when there's a demand for a particular title in the United Kingdom or in another market for that matter. And when they see there's an opportunity to bring securities into the United States, they will submit an issuance. If they see an opportunity that it's more efficient for them to deliver the security back into the home country, then they will facilitate the cancellation. So yeah, we have everybody ready to go, but at this point in time, we will be happy to work with more market makers.
A very simple question for you. Are you sponsoring or supporting sponsored ADRs and unsponsored ADRs, or just sticking to one or the other?
Very, very good question. For those in the audience, a sponsored ADR means a company wants to proactively raise capital in the United States and is using the ADR structure for that. In an unsponsored program, the foreign issuer actually is not involved, and multiple times the foreign issuer does not even aware that there's demand for the asset in the US marketplace. We specifically focus initially on the unsponsored ADR, so the foreign issuer is not actively involved, and that means we have one party less to convince to do business, and that also means we can bring hundreds of securities very quick into the United States. So it's not about one security, it's about the transformation of an entire asset class. Clearly, we have not built an unsponsored ADR engine with DSDC. This is merely an entry point for us, and we clearly have aspirations to go beyond.
A final question for you. You've now spent a great deal of time and a great deal of money to build a product which actually has some pretty revolutionary features to it. Can this model that you've built be extended beyond the DR market?
Absolutely, right? At the end of the day, we have designed it from the outset to be asset class. I shouldn't say asset class, I should say security class agnostic, right? We can't handle any interest rate swap, credit default swaps. The bilateral contracts, they require different architecture. But we can handle any form of security that can sit within a kind of account, custodial account, brokerage account, and can move between accounts. So those typical regulated public and private, if you want, instruments can be supported by this architecture. Absolutely. And so again, ADRs is merely an entry point for us. It's very attractive. We can bring value to the US marketplace on day one. Today we are connected to the UK market. The next 5 European markets have been identified, and there's about 40 to 50 more international markets, and they can be added to that network fairly easily. We can replicate the model, and so it's a very neat growth strategy, that the path that we have. There's a couple of growth hacks that we can have a conversation about when we meet over beer. But again, ADRs is an entry point, and we want to add more asset class. We actually work on some of them. One very innovative and novel, where we have another group, is called carbon neutral securities. Again, on ADRs, it's about you move a security from one jurisdiction to another. In carbon neutral securities, it's about converting a security from a brown issuer into a green investment in a reliable and trustworthy manner. Again, a very interesting concept. Probably not as appealing to the United States marketplace as it used to be in the past. Perhaps that is going to change with administrations in the future again. But this is a global asset class, one more time. Again, and lots of other activities going on our side. We're very busy. We absolutely enjoy it, and we have invested a lot of sweat into all of this. And finally, now I think the regulation first approach, I'm pretty convinced is going to pay off, right? Despite all the changes in the United States on going pro-digital, I think these play in our favor, and will accelerate that those securities that we bring into DTC today will be very quick available on fully digital rails in wallets available for the US markets.
Thorsten Peisl, Chief Executive of Kalyp Technologies, thank you very much for sharing your knowledge, your experience, and your vision of the future with the members of the Future of Finance.
Dominic, thank you very much.